Well, folks, the time has come to start loading the boat on dividend stocks. And I mean absolutely loading the boat. The exact same phenomenon that happened last year is happening this year, just with dividend stocks rather than growth stocks. It's absolutely amazing. So a lot to take you through. It's a very busy video. I have prepped a lot. I've been prepping this video for like the last few hours now at this point in time. A lot to take you through here today. I'm going to show you specific examples of some stocks. Going to talk about what if a recession comes in 24. We're going to talk about how the Fed plays in all this, how their moves are going to affect these dividend stocks in a substantial way, okay? So this is an action-packed video. I appreciate every single person for being here. But nonetheless, if you take nothing else from this video, the next 3 to 6 months is load the boat time for these dividend stocks overall, okay? So where I actually want to start out, by the way, thank you every single person who subscribed to the channel. I appreciate y'all being here as always, okay? So where I want to start today's video is looking at the NASDAQ last year, right? Growth stocks got wrecked last year. Tech stocks got wrecked last year. The NASDAQ got wrecked last year. We all know that, right? It seemed like every time you thought, okay, this has to be the bottom. These stocks have to bottom. It just went lower and lower and lower. And that was consistent throughout, basically up until about mid-October. And we finally bottomed out the market around October, beginning of November. But it's just like every time it started to come back, it ended up lower and lower and lower until you just are like, when's the pain end? Like, when's the pain end in these growth stocks? And the moves specifically in these stocks was unbelievable. I mean, it's just simply unbelievable that you're like, are all these stocks going to zero? Like, this is incredible, right? You look at a stock like NVIDIA, right? NVIDIA in 2021, $325 plus stock, right? It starts to fall. You're like, oh, it's coming back. And then it falls more. And then it falls more. By the time it was said and done, NVIDIA was like $110, $111 a share. It had fallen 60% or so. I mean, absolutely insane to think about how far NVIDIA fell, right? And now the only thing that falls in regards to NVIDIA is people falling over themselves to buy NVIDIA stock because the stock's $500 here today, right? I mean, it's absolutely incredible how far that stock really fell in that situation, right? Tesla, my Esla, known as one of the best growth stocks, certainly in the entire stock market, right? Look at the fall of Tesla from $400 plus, going, kind of into the end of 2021. And then every time you thought, oh, Tesla's coming back, it just goes lower and lower and lower until it finally bottoms at the beginning of this year, end of last year, at just over $100 a share, right? For one of the greatest, NVIDIA and Tesla are they're the kings and queens. Let's just call it what it is. This is a king and the queen of growth stocks in the stock market. NVIDIA and Tesla, they're the king and the queen. And those stocks literally people would sell them at any price. I mean, from $400 to $100, you got to be flipping my flapjacks. Look at a stock like Meta, right? Certainly one of the greatest growth stocks of the past 10 plus years in the stock market, right? In Meta, $380. And then every time you think Meta has to come back, it goes lower and lower and lower. People refuse to buy Meta even when it was under $100. Oh, it's going to $50. It's going to $40, right? Just like people were refusing to buy Tesla when it was $100. Oh, it's going to $60. It's going to $50. I remember that, okay? This is what was going on. People are getting completely delusional in regards to these stocks. They're all going to zero. Yeah, Meta, Tesla, NVIDIA, they're all going to zero. They're all going to zero. Delusion, pure delusion. You were selling Meta for anything less than $250? Delusional. You were selling Meta for less than $100? You don't have a brain, okay? That's as simple as that. You literally don't have a brain. Palantir, right? Palantir 2021, late 2021, stock's $27, and it just falls and falls. And every time you think, oh, this has to be the bottom on Palantir, it's never the bottom. And the stock finally actually bottomed at $5 to $6 a share. In the $5 to $6 range, you could always conceive of a possibility of like Palantir falling in the $10 to $15 range, but $5, $6? What are we talking about here for Palantir? Are you kidding me? I mean, with one of the most pristine balance sheets in all of the world, like, what are we talking about here? Government contracts and commercial contracts? Oh my gosh, right? And for those of us that got to take advantage of that, man, did we take advantage of that, right? Now we're sitting on a $319,000 gain on Meta, a 143% gain, right? Palantir sitting on a $35,000 gain, a 71% move up there. Tesla, my Tesla, I hadn't bought Tesla shares in years. And I actually started buying Tesla shares again at the very end of last year and into the beginning of this year. Because I'm like, you're going to give me Tesla for $100, a little over $100? Okay. If you want to give me free money, I guess I'll take free money. Like, okay. Like, this is beautiful, right? And sitting on a 99% gain on those shares, 133% gain, a $20,000 gain, just the shares I bought at the beginning of this year, right? When you get these sorts of opportunities, you've got to pounce on these opportunities because they don't come around very often. There's only a few time periods, and I'll show you actually the few time periods in my past 15 years where dividend stocks were actually cheap. Same thing with growth stocks. Growth stocks are very rarely cheap. When you get one of those opportunities where people are acting delusional and they're selling these stocks at any price and nothing matters, you need to take advantage of that. And this is what's going on in dividend stocks currently. People no longer have a brain in regards to dividend stocks. They're selling these stocks at any price. It doesn't matter the PE ratio. It doesn't matter the business. It doesn't matter anything. They're selling these stocks at any price, and now's the time, okay? Let's start going through these, okay? So first place I want to start here is looking last year at some of the most popular kind of dividend ETFs versus the NASDAQ, right? So SCHD fell about 5% roughly last year, 4.9%. LVHD, which is another popular dividend ETF, was down about 3% last year, right? So dividend stocks actually held up pretty well in 2022 relative, right? And then the NASDAQ, like you look at the Qs, for instance, the Qs were down nearly 30% last year, right? And that's not even at the lows. It was down a lot more at the lows, right? So you had dividend stocks hold up pretty darn well last year. You had growth stocks, NASDAQ-related stocks get absolutely obliterated. And now you have this interesting phenomenon where you have one of the most massive divergences you'll ever see in the stock market. This is insane, right? Look at this. The Qs are up 41% this year, and SCHD is down about 3% this year. LVHD is down over 8% this year, right? Two of the most popular kind of dividend ETFs out there. And here we are in a situation where it's very possible the dividend ETFs are going to be down 2 straight years. These are supposed to like almost never go down on a given year, right? But if they go down on a year, it's rare. If they go down on 2 straight years, that's extremely rare. Like that hardly ever happens where these dividend ETFs go down 2 straight years. And that's looking like a pretty darn realistic possibility and probability now at this point in time, okay? Which is shocking. Now, I want to take you through some of the best dividend stocks out there, okay? Walgreens Boots Alliance, WBA, this is one of the best dividend stocks of the past many decades, okay? And when you talk about great dividend stocks, you don't judge them over a 1-2 year frame. You're judging great dividend stocks over decades. And Walgreens has always been one of the best dividend stocks in the entire stock market. And this stock is acting like the growth stocks acted last year, where every single time you think this stock has to bottom, this has to be the bottom, this has to be the bottom, it goes lower and lower and lower and lower, right? It never seems to bottom. It doesn't matter the P. The P is at 5. You know, the forward P is at 5 on this stock. It doesn't matter. It doesn't matter the dividend yield. People just understand sell, 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 don't buy in regards to stock, right? Foot Locker, one of the best dividend stocks of the past decades. Every time you think, oh, this has to be the bottom for Foot Locker, it goes lower and lower and lower and lower. And it doesn't matter what the stock price is. It doesn't matter the PE ratio. It doesn't matter anything. Just like with growth stocks last year, didn't matter what you had going on over the next 3 years, 5 years. Doesn't matter what your revenue is going to be over time. Doesn't matter what you did in the past. All that matters is sell. That's all that matters. People aren't thinking with the brain. They're thinking delusional. Complete delusion. Target, one of the best dividend stocks of the past several decades, right? This stock, earlier this year was $170+. And every time you think, oh, Target has to bottom, Target has to bottom, Target has to bottom, Target has to bottom, it goes lower and lower and lower. All people understand in regards to Target is sell, right? The Cheesecake Factory, one of the best dividend stocks of the past many decades. I mean, this stock, every time you think, okay, we're coming back, baby, we're coming back, it goes lower. And today, that stock's literally at a new low literally today, right? Every time it has to be coming back. It goes lower and lower and lower for one of the best restaurant-run chains literally in the United States of America, right? Coca-Cola is the king. They're the king of dividend stocks. There's nobody above Coca-Cola. They are the king. Okay? They're the NVIDIA. They're the Tesla. What NVIDIA and Tesla are to growth stocks, Coca-Cola is at for dividend stocks. They were seen as the king. This stock is now at a new fresh low today. Every time this year you thought, oh, Coca-Cola's coming back, it's coming back. It goes lower and lower and lower and lower. And it doesn't matter what Coca-Cola's done over the past 50 years. It doesn't matter what Coca-Cola's doing over the next 50 years. All that matters to people right now is sell Coca-Cola stock. That's all that matters. That's all that matters for the king. What about the queen? What about the queen? You want to see the queen? The queen of dividend stocks is Pfizer. One of the most memorable, magical dividend stocks of the past several decades. They're the queen. It's the queen of dividend stocks, right? Pfizer. Look at this stock this year. This stock, every time you think, oh, it has to bottom here, maybe it's coming back, it goes lower and lower and lower. And literally, Pfizer today is at a new fresh low. Pfizer, it doesn't matter what Pfizer has in the pipeline. It doesn't matter what products they have in the market. It doesn't matter that they're needs-based, and regardless of whatever economic climate, Pfizer's going to put up numbers. None of that matters. All that matters in regards to Pfizer is sell. That's all that matters. The dividend yield, they don't care about it. The PE ratio, they don't care about it. The 5-year prospects, they don't care about it. Nothing matters. Nothing matters. Management team balance sheet, all people understand is sell. For the queen of dividend stocks and the king of dividend stocks, what a time. What a time to be in the market, okay? To show you how insane some of these dividend yields are getting now at this point in time, let me go ahead and pull this up. WBA's dividend yield is now at a shocking 8%. Think about this for a moment. A 4% dividend yield is a monster. This stock could cut its dividend yield in half, and it would still be a 4% yield. Think about that for a moment. You got to be flipping my flapjacks in regards to WBA. If this is not peak delusion, I don't know what is, okay? CVS's dividend yield now is 3.7% on the stock. And guess what? It's right about its 52-week low right now in regards to CVS, if not a multi-year low, right? Look at Target. Are you kidding me? A 3.5% yield on Target now at this point in time? And guess what? This one's right about its 52-week low as well, right? I mean, 3.5% for Target? Like, Target's one of the most comfortable stocks I would possibly feel like holding for the next 5 years in the market. Like, literally, if you told me I had to put all my money in one stock for the next 5 years, Target would be up there. I don't know if it would be the stock, like, let's say I wasn't allowed to trade at all. I mean, if I just had to put all my money in one stock, I might feel pretty dang comfortable in Target, to be honest. And, 3.5% yield now. Coca-Cola's back over a 3% yield. I haven't seen Coca-Cola over a 3% yield in quite some time. But that just goes to show you where this market's at now at this point in time, right? It's sell. Pfizer, the queen of dividend stocks, is now yielding 4.64% on Pfizer. Holy smokus, man. That's no joke. Look at Verizon. Verizon's now yielding 7.5% on Verizon now at this point in time. Oh my gosh. AT&T's now yielding over 7.5% on this stock, right? Jeez, the yields are getting just insane. Xerox is now has a yield of 6.3%. I mean, these yields are just unnatural, right? Like I said, 3, 4, 5% are like monster dividend yields. And now you got some of these stocks yielding 7, 6, 7, 8%. Man, our dividend stocks beaten down right now. Nordstrom yielding a nearly 5% on good old Nordstrom right now at this point in time. My gosh, okay? So, before we get into talking about recession, Fed moves, how all this can affect these dividend stocks in a substantial way, okay? The moral of the story so far is people are no longer thinking with their brains in regards to dividend stocks. They are just thinking sell. Seems like there's no appetite for buying these stocks, and the selling pressure has been relentless this entire year, okay? That's not smart. Let's just put it that way. Just as growth stocks being sold off the way they were sold off last year was not smart. Whoever thought they were smart for selling Meta at $88, look at you now. Are you proud of yourself? Whoever thought it was smart to sell Nvidia at $110 last year, are you proud of yourself? Okay? Whoever was selling Tesla at 101, are you happy? AMD at 55, are you happy? Okay? This is now going on in dividend stocks. It's brainless, okay? It's absolutely brainless. It's clueless activity, but it is what's going on. And this is where great arbitrage opportunities are opened up in the market, okay? Now, let's take this a step further, okay? Let's talk about a few scenarios that could play out here, okay? You can say, well, maybe these stocks at this time next year are a lot cheaper than they are right now. It's always a potential, right? But it's not as likely as you might think. And let me explain why. So, a lot of people are saying, okay, we are here, Fed lags could catch up, recession could come in 2024, okay? So, in regards to some of these dividend stocks, you got to understand, if we actually go into recession, people start moving money into more safety stocks, as you actually witnessed in 2022, right? If people are much more fearful about the economy, they're going to move money into what is seen as safer stocks. Because guess what? Whether unemployment is 3.5% or 6.5%, people are still going to Walgreens to go buy Band-Aids and go buy some Tylenol for their headache and go get their prescriptions, regardless if unemployment is 3.5%, 6.5%, or 9.5%. It's irrelevant. Pfizer is still putting up the same numbers that they would in a 3.5% unemployment rate as they would in a 7.5% unemployment rate. It makes no difference, okay? Some of those businesses, sure, if you had a major recession, they could be negatively affected. Like, let's say a cheesecake factory, for instance, they might not have as many customers coming in on a Friday night, on a Wednesday night, on a Saturday night, right? But at the same time, like, a lot of that stock's already been priced in. That's why the PE ratio is so cheap, okay? So it's kind of gotten in front of that, right? So some of these business models could be a little negatively affected. Some would be hardly negatively affected, and some would be not even negatively affected at all. Meanwhile, people will look to safety in that sort of situation, and then they go back to what has worked over the last 20, 30, 40 years, not what's worked over the last 3 to 6 months, right? We witnessed this last year. This year, people are like, oh, economy's holding up good. We're not as scared about it. Everything's fine. Growth stocks. But as soon as people get scared again about recession, all of a sudden you have the flip happening, right? Now, think about it this way, right? If you start to actually have real recession possibility, unemployment starts climbing, next thing you know, we're in the 4s or 5s or something like that. Let's say that happened, right? What do you think the Federal Reserve is going to do? The Federal Reserve will start lowering interest rates, right? The Fed funds rate right now is the highest it's been since about 2001, 2002, okay? 2001 specifically. So here we are with Fed funds rate at a multi-decade high, okay? And the reason this is so important is this affects treasuries, this affects all interest rates in general. So by the Fed having interest rates up here, it makes car loans much more expensive, home loans much more expensive, everything across the board, right? And so if all of a sudden we get into a recession and the Fed starts lowering, obviously, Fed funds rate, which is what they'll do if we go into recession, then we're in a situation where suddenly these companies are looked at as gems again, okay? And for multiple reasons. One is they'd be able to restructure debt. If any of them have heavy debt loads, obviously, if Fed lowers interest rates, the debt situation would be a lot more appealing to these companies for restructuring, refinancing any debt. But secondly, okay, is over the past 12 months, a lot of people haven't been as interested in dividend stocks because you can get 4 to 5% in a savings account, right? And I mean, for many of the less popular banks, you can get 4 to 5%, government backed up to $250,000, right? And so people are doing this across the board through SoFis and the Allied Banks and BMO Capitals and CIT Banks and Lending Club and all these guys, right? Because they're like, why would I go buy a dividend stock and risk my money to get 4.5% yield when I can get 4.5% from a savings account right now, right? And so this is a huge thought process that's going on right now that's kind of been extra selling pressure for stocks out there and less buying pressure. Because instead of people buying these stocks, they're saying, I'll put my money in a savings account. I get the same yield with government backed, no risk. Why not do that, right? CD accounts. You can get 5%, even more than 5% on some of these CD accounts from some of these, different banks and whatnot, right? Why would I risk my money when I could just buy a CD and get 5+%? And then you have treasuries, right? Most people never even thought about buying short-term treasuries. And now all of a sudden people are flooding money into treasuries, right? And these are the specific problem children for dividend stocks, right? 3 months, 6 months, and 1 year. You can get almost 5.5% on a 3-month treasury, over 5.5% on a 6-month treasury, and 5.4% on a 1-year treasury, right? And so once again, people say, okay, this is government backed. I'm basically taking no risk, and I can hide my money out here for the next 3 months, 6 months, the next year, and get 5.5% roughly. Why not do that, right? And so That's where you have a massive influx of money at right now, right? Is in treasuries as well. So you have CD accounts sucking money out, savings accounts, and treasuries all simultaneously sucking money from dividend stocks. It puts extra selling pressure on all these stocks, and it creates less buying pressure because people are just like, I'm going to buy a treasury. I'll put my money, I don't know what's going to happen over the next 6 months, so why not put my money and get 5.5% in a treasury at, 5.5%. That's what we have going on right now. Now, in regards to this, right, I don't believe interest rates are going to stay up here forever. If you do, then you clearly think like, man, the economy is going to be great forever, and you believe unemployment is going to be 3% forever, right? I don't know about that. Here's the deal. I don't know if you guys ever done this at the gym before where you just literally just hang on the bar. You don't do any pull-ups or anything. You just hang and you just like, how long can I hang for? 30 seconds, 45 seconds, a minute, 2 minutes, before I just my arms are going to fall off. I need to drop down, right? This is our economy right now. Our economy is hanging on that bar, and it's just a question of how long till we hit the floor. That's all the question is now at this point in time. There's no question, are we going to hit the floor? The question is, we're going to hit the floor. And how long does it take to get there, right? Are we going to hit the floor in 3 months from now, 6 months from now, 9 months from now, a year from now, 18 months from now? That's the whole question. So at the end of the day, the economy is going to hit the floor. We're going to get into trouble. It's always played out this way. It's never not played out this way. And the Fed will end up lowering Fed funds rate. And interest rates will drop back down substantially again, okay? The only question is, when does it happen? That's the only question, folks. Not when. Not if, it's just when, okay? So when the Fed drops rates back down, I can tell you it's going to be a flood, like you've never seen, a flood of money into dividend stocks again. And that's going to be a crazy, crazy time period because you could have economic data that's very weak and dividend stocks that are holding up very well and some that are even, let's just call flying in the face of a situation where you have an economy that's actually deteriorating massively, which is very intriguing. Because I can tell you, all this money is going to be looking out there and they're going to be saying, okay, I need to get yield. Where do I get yield? Well, if all of a sudden your savings accounts aren't yielding crap again, your CD accounts and your treasuries, next thing you know, you go to dividend stocks, okay? And that's where the flood comes in. So this is where I'm getting ahead of that. I want to get ahead of that. Just as I got ahead of the whole growth stock, pile in this year, right? I haven't even been putting much money in growth stocks this year because I got in already last year. I took advantage of the deals. I beat everybody to it, right? So this year, I'm going to beat everybody to these dividend stock opportunities again. And then when the flood happens and everybody starts piling back into dividend stocks, I'm already going to be in them, sitting back and just watching the stock prices go up and saying, hey, welcome in new shareholders. I'm glad you guys are enjoying this, okay? Now, in regards to dividend stocks, I've been in the market 15 years. I've only seen dividend stocks cheap 3 times, okay? 3 time periods. One was when I first got in the market in 08, 09. Dividend stocks were very cheap then. That was a time period where the whole market had sold off massively. You had all the indexes peak to trough from where they were in 07 to where they were at the beginning of 09, which beginning of 09, I'm really talking about February, March. They all fell 50%, peak to trough. Every one of the indexes, S&P 500, Dow, Russell, NASDAQ, all 4 of the big dogs all fell 50% peak to trough, okay? So 08, 09, everything was cheap. Growth stocks, dividend stocks, it didn't matter what you wanted to buy. Everything was cheap. But certainly that was a time period when, dividend stocks were super cheap. The other time period I got to take advantage of this one was the first half of 2020. Basically from the beginning of the year all the way through into the beginning of summer of 2020. Dividend stocks were extremely cheap. Obviously you had the market crash there, and then a lot of people were uncertain about when the economy was going to open up again. Retailers were trading very cheap. Restaurants were trading very cheap. A company like Tapestry that I was buying back then was yielding. Oh gosh, the Tapestry yield was insane when I was buying it. I think it was either a 6 or 7% yield, something insane for Tapestry TPR at that time. Because people were very uncertain about what's going to happen with the reopening. Are people going to buy stuff again, Coach bags and whatever, right? And so what a time period that was. In the second half of 2023, this is the only other time I've seen dividend stocks super cheap. And when I say super cheap, I'm talking about just at P ratios that you're just like, forward P ratios, you're just like, this is silly. Dividend yields that you're just like, this is ridiculous. 3 time periods in 15 years, folks, okay? And so How long do they stay cheap? Who knows? Maybe it's a few months. Maybe it's a year. I don't know. All I'm going to say is the next 3 to 6 months, this is where my focus is going to be in this market, because I can tell you it's not going to stay like this forever. And then we'll be looking back at this time period and be like, dang, man, should have been buying all those cheap dividend stocks. You know, like delusion. That's what's going on in this market right now. And it's probably going to go on maybe for another few months. And so I'll be taking advantage of every deal I can possibly get. One thing I know is I'm not going to time the bottom perfectly. And so I just need to be buying the whole time period. And so dividend stocks, here we come, baby. It's going to be a fun little time period here. I appreciate everybody joining me as always. Thanks so much. Thank you for being subscribed. Hope you got a good value out of today's video. And if you're looking to apply, join my private group, learn everything I've got up here that I learned over the past 15 years, then apply. That will be the pinned comment down there to fill out an application. We can see if you're a good fit to join us in there. Much love and have a great day.